Aloha and Happy New Year. Hope you're doing well as we kick off 2021. I'm Evan Leong from Grain Gain Hawaii, and welcome to our 19th Save Hawaii Jobs and Businesses PPP webinar for January 13, 2021. Please let me introduce our team for today. First off, we have Cynthia Yamasaki, who's the Outreach and Marketing Specialist at the SBA Hawaii office. Darren Leong is from the Law Office of Darren R. Leong and is a specialist in employment law. Stacy Katakura is the CEO of Accumulus, which is an outsourced CFO and accounting firm. We have Jeff Harris, who's a senior name partner at the Torkelson Law Firm. Buddy Leong is the executive director of Virtual Student Experiences. He handles our communications, our backend, and chat box. Koko Leong is the chief marketing officer for Virtual Student Experiences and is in charge of our content, video editing, and our YouTube channel and podcast. Beckett Wren is the head of communications for Virtual Student Experiences and is handling the show notes for today. Questions will be taken during this webinar through the Q&A module only. You'll see the button at the bottom of your Zoom window. If you post it in the chat box, it's not going to be answered, and you'll most likely be asked by Buddy to post it in the Q&A module, so it's best to do it there first. You can upvote questions in the Q&A module, and we'll do our best toward the latter part of the webinar to answer them live. Disclaimer for today: this information is provided for informational purposes only and is not intended as legal or tax advice. Please consult your attorney or accountant to discuss your particular business situation. SBA's participation in this presentation is not an endorsement of the views, opinions, products, or services of any of the participants, persons, or entities. All SBA programs and services are extended to the public on a non-discriminatory basis. This information is current as of January 13, 2021. And without further ado, let's start with Cynthia Yamasaki. Thank you.
Hi, everyone. I'm Cynthia, and thank you for joining us today, everyone, and taking the time. I'm just going to cover three main things, very high-level updates. So this economic aid package is being rolled out, and it's in phases. And like today, we'll be focusing more on the PPP updates. I wanted to clarify, because there seems to be some confusion, but when you hear of the opening of the portals, it means that the SBA is opening up its lending portal to the lenders. It's not for the borrowers to go directly. This is for PPP loans. And it was rolled out in phases. The first phase started on Monday, and that was what they call the first draw. The first draw were for the underserved areas, and in particular, women in business, veterans in business, and other underserved, economically disadvantaged areas. Those loans were available for first-time borrowers, and it was through what they called a community financial institution. So those are like what we call CDFIs, certain credit unions and lenders that have this ability to do community financial loans. We have a list that Buddy will post of the Hawaii lenders that you'll see an asterisk that denotes who are those lenders. And also on that list is all the Hawaii lenders, if they are offering PPP loans to existing borrowers, people who got PPP loans last year, or in existing customers or new customers. So, so let me just clarify this PPP. When they talk about first draw, that means for any person or business who did not get a PPP loan last year. So the first rollout, as I mentioned, is for CFIs. They rolled it out on Monday, and then today, Wednesday, they rolled it out for that group that got a loan and want to apply for more. The next phase of rollout are for most of you on this call who are interested in what they call the second draw. The second draw means that you received a PPP loan last year and you would like to apply for more funds because you had economic losses or continue to have economic losses because of this pandemic, which is unfortunate. So those details are going to be covered by my colleagues here on the line, Darren and Jeff. But just to know, first draw means you never got a loan. Second draw means you had a PPP loan and you would like to get more. That you would go through your if you had a loan last year, it's highly recommended that you go back to your lender, but you don't have to. But they would have all the information. So you go to the lender that offered you or gave you the PPP loan. Other things that are covered in this economic package that's going to be rolled out is grants to shuttered venues. So it's called Save Our Stages. That will include the entertainment and certain ones. Now there's a webinar tomorrow and I will give the information if you haven't seen it already. There's a webinar tomorrow about that grant. If you get that grant, if you fall into that category, you do not qualify for a PPP loan. It's one or the other, not you can't receive both. Then we are expecting more information of how the EIDL advance or grant, as it was known, that was issued last year is going to change. So generally speaking, we know that for loan forgiveness last year when we rolled it out, when you got your loan approved for forgiveness, the EIDL advance that you received was deducted from that forgiveness amount. Well, the new Economic Aid Act reversed that. And so if you already got your PPP loan forgiven and your EIDL was deducted, your advance was deducted, the SBA is going to work with the lender, and then the lender will contact the borrower who had that PPP loan forgiven. So that's really a high level that will be discussed more. The other point I wanted to share is that it is something like last year, as Jeff mentioned as we were talking. It's almost like last year where this is something where there's economic aid being rolled out, want to do it quickly. So there's a lot of information that was rolled out in general and details are following. So highly recommend that you keep posted to these webinars like today. Also, you can look, if you subscribe to the SBA's newsletter, just go to sba.gov and subscribe to be on their newsletter list. You'll receive information. You can also subscribe to the Hawaii mailing list. So if you go to sba.gov/Hawaii or HI, then we will post all the different webinars that we will be rolling out in more detail as it impacts all these economic aid programs. I mentioned the list of lenders. Please know that this list is what we found for the Hawaii lenders. We also included some of the fintechs like PayPal and Square, whether or not they are offering this next round of PPP. And that's it. So, you can get that from Buddy. And if you have any questions, I also am available and my information is there at sba.gov. Cynthia.yamasaki@sba.gov. Thank you. Back to you, Evan.
All right, thanks, Cynthia. So a few just items to note. In the chat box is where Buddy posted a link to the Google Drive. So that drive has the current version of our memo there. It's version 1, dated January 11th. So feel free to go there. What we tried to do is put an all-in-one summary of PPP1, of PPP2, and what we think is a very important tax credits, the employee retention tax credit. So feel free to go there. And then also on that site or on that Google Drive is the document that Cynthia mentioned that has the list of participating PPP lenders. Reminder to upvote in the question and answer box, the Q&A box, upvote the questions that are most important to you. So after we give a little presentation, we'll, as usual, go into that and go right down the lists with the most upvoted ones. As I'm looking through it, it's nice to see that the questions that you guys have are right on point to the ones that we have as well or anticipate. So we should be, I think, efficient and helpful when we do that Q&A. So Jeff is going to cover the PPP2 because the folks on this webinar are the vast majority have already gotten PPP1 and have a real pretty deep understanding of it. So Jeff will cover the outline of PPP2, and then Stacy will cover the employee retention tax credit. I'll just note up front, if you listen to nothing that's said over this hour, but you are a business that has, you know, suffered a real significant decline in income, revenue, et cetera, pay attention to the employee retention tax credit, because the combination of PPP2 and the employee retention tax credit is very substantial. And in a number of cases for you folks, the amount of financial benefit from the tax credit is actually more than what PPP2 will be. So don't discount it, keep it in your sights. And I would do a lot of following up on that tax credit to see if you qualify as well. Okay, I'll pass it over to Jeff, who will unmute himself, and then go from there. Thanks, Jeff.
Thank you, Darren. And let me echo Darren's last point. Unlike PPP1, PPP2 says you can use the employee retention tax credit and the PPP2. I'm going to call it PPP2 loan, as long as it doesn't cover the same wages. So, and we'll get to that more some later. But right now I want to talk about who's eligible for the loan, because there's been a little bit of confusion for that so far. First of all, you had to receive a PPP1. You had to use the PPP1 or be able to say, I'm going to use the PPP1. Second of all, you can't have more than 300 employees. It's not 500 employees anymore, it's 300 employees. And third, you have to have experienced a reduction in revenue 2020 compared to 2019, or 1 quarter in 2020 compared to 1 quarter in 2019. What about if I wasn't in operation all of 2019? Well, there's some special rules that apply to you if you weren't in operation for the first, second, third, or fourth quarter. If you weren't in operation in 2019, there's some special rules that tell you how to show you experience sufficient revenue. Second, after you determine whether or not you're eligible, and excuse me, there are special rules for accommodation, food, and news organizations. That 300 employee cap doesn't apply outside of your individual location. In other words, if you're a chain of restaurants or you're a chain of hotels, that 300 employees just applies to the employees you have now at that location, not the employees you had in 2019, the employees you have now. So if you have less than 300 employees, but you have a number of other locations that get you over 300, if you're outside of accommodations, food, or news broadcasting, you go over 300. If you're in accommodations, food, or broadcasting, and it's just your location that measures the 300. Same with the gross receipts. Same with the gross receipts comparison. You compare the gross receipts at that location for those special entities. How much is the loan you get? That's different than it was in PPP1 for those same entities, for accommodations, food, and news. It's 3.5 times your average annual payroll for the measuring period instead of 2.5. Your total loan is larger. The next thing to note that's different in PPP2 is the covered period during which you can use that loan after you apply for and get it is more flexible. You can choose any period between eight weeks after you get the loan and 24 weeks to use that money and measure that, measure how you use that money. To obtain forgiveness and turn that loan into a grant, you have to comply with certain use conditions. That one that is the same in PPP1 and PPP2 is 60% of it has to be for payroll expenses. But payroll expenses are expanded. Payroll expenses now include your dental, a number of your other employee benefits that weren't included in PPP1. The rule is still the same though. You have to have paid or incurred those payroll expenses within the payroll period that you choose, in between 8 and 24 weeks. In the memo, I think there's additional non-payroll costs that are added on: covered operations expenses, covered supplier costs, covered worker protection expenditures, and covered disaster costs. The one interesting thing there for restaurants is it's going to include your perishable goods as part of the non-payroll costs that you can use a loan for. But your real focus is going to be on making sure that the 60% of your loan goes to your payroll costs. Then, well, how am I going to turn this loan into a grant? How am I going to make sure it's completely forgiven? Well, first of all, you're going to have 10 months out. You're still going to have 10 months after your loan covered period ends to apply for forgiveness. So just like we told you last time when we were talking about PPP1, we told you hold off on seeking forgiveness unless you're sure you're going to get all of it, because things are going to change. And here we are today, they changed. Okay, so and just like we said last time, the plane is going to be built in flight. It's going to be built in flight. There's a lot of questions that we aren't going to be able to answer today, but we can answer some. And that's that what is still there. What is still there is, even if you get the 60% payroll cost satisfied and use the rest of the loan on non-payroll costs, you're still going to have these forgiveness traps, the traps that you can lose forgiveness on if you reduce your employees' pay too much, or you reduce the full-time employees too much. The one exception that we still have, that we still know we have to that, to those forgiveness traps, the things that will make you lose forgiveness. I don't have the same employees that I had number of employees that I had last February. I reduced the employees' pay by more than 25%. The one excuse you have that gets you out of those forgiveness denials is what our governor and our mayor gave us: the travel restriction, the business shutdowns. If when you get to forgiveness, which is 8 to 24 weeks after you get the loan, you can say, my business suffered because of that travel restriction imposed by the governor, or the business restrictions imposed by the mayor. Well, then that's a currently existing. It remains an excuse to elimination of your forgiveness under PPP2. There will be some more forgiveness exceptions or exceptions to the forgiveness denial later. But other than that, there's still no reason not to apply for this loan if you're eligible, because even if you don't meet the forgiveness, or if you're denied the forgiveness because you haven't met these these maintaining employee or maintaining pay requirements, it's still only a 1% loan. I know I've tried to race through this, Darren, but I wanted to leave time for you and Stacy to cover the other details and answer some questions.
Thank you, Jeff. So Stacy will cover the employee retention tax credit, and then we could take some questions, and then I think we'll take some questions or provide some commentary about the interplay between the two, even if there aren't questions on it, because I really do think that it's PPP2 and the employee retention tax credit together that is a big difference. So go ahead, Stacy.
Sure. So, I mean, we haven't focused too much on the employee retention tax credit in the past because previously you weren't allowed to take the employee retention tax credit if you had the PPP loan, but that the new law that just passed changes that. So all the businesses who did take a PPP loan in the past are now eligible to take the employee retention tax credit. However, as I think Darren mentioned earlier, you cannot claim the tax credit for the same period that your PPP loan covered period. So what it is, it's a fully refundable tax credit for employers based on qualified wages for the period between March 12, 2020 and July 1st, 2021. Eligible employers are all employers that carried on a trade or business during 2020 or 2021, including tax exempt organizations. And they qualify if either they fully or partially suspend operation during any calendar quarter or of 2020 or the first 2 quarters of 2021 due to orders by the government, or if they experience a significant decline in gross receipts during the calendar quarter. And so this actually applies retroactively. So if you did take a PPP1 loan, you can now take the employee retention tax credit. So companies with fewer than 100 for the retroactive tax credit, which is slightly different than the prospective tax credit. Retroactively, companies with fewer than 100 employees qualify. Gross receipts were less than 50% of gross receipts for the same quarter of 2019. Annual cap of $5,000 per employee, or 50% of the $10,000 of qualified wages. And employers that have already filed the employment tax return can offset your tax return for the first quarter of 2021. So the prospective tax credit applies to wages paid after January 1st, 2021 and before July 1st, 2021. So the first 2 quarters of 2021. After January 21, this applies to employers that have 500 or fewer employees instead of 100. And then after January 1st, it changes the required business decline from 50% to at least 20% in gross receipts as compared to the same quarter of the prior year. And then the credit percentage increases from 50% to 70% of the first $10,000 of applicable wages in the quarter. So $10,000 per quarter. So in essence, you can take up to 70% of 10,000 or 7,000 per quarter. So the employee retention tax credit can be up to $14,000 per employee. So I think that's it. We can. I don't know if you guys want to add on a discussion.
Yeah. Let me add on to that employee retention tax credit, and then we can launch into some of the questions. We may recover. I know Jeff is in there answering some, just so that everyone hears some of the answers. We may recover some of that, but so think of the employee retention tax credit as having 2 parts to it. So the first part would be the 2020 section. So from March 12th through the end of the year, having its own set of rules, and then a separate set of rules for the tax credit for the first 2 quarters of this year. Okay. And then in terms of thinking about, hey, do I qualify? Think about it as you have to exclude the period where you are using PPP money to pay payroll because you can't include that stuff. So that'll probably for most of you be in that April through either April-May window, or if you use 24 weeks, a longer window, but still leaves a little bit at the end of the year. And then if you're thinking about getting your PPP number 2 this year, then the period available for the tax credit is probably January, because that will be before you get a PPP 2. And then the second quarter, depending on how fast you use up the PPP 2 money. And Stacy went through the specifics, but think of it as there's a potential for a maximum of $14,000 for the first 2 quarters of this year if it was fully used, and $10,000 for last year, which is actually more than you'd get for that employee under the PPP2. So just kind of think about how those two as puzzle pieces fit together so you can try to maximize the governmental financial benefit. Okay, so let's launch into the 67 open questions. And actually, let me recover a few of the ones that just already got answered because it's pretty quick and just so it doesn't get missed. The question on the application form for number of employees is a question that is somewhat meaningless, but I think they're using it for tracking purposes, like statistical purposes. So it's current employees, but it doesn't have any impact on how to calculate your loan amount. So for your PPP loan amount, as Jeff previously said, you got 3 options. You can just reuse 2019, which is what almost everyone already used, and the bank probably already has that information. And for the majority of you who had reductions in 2020, 2019 is what you're going to want to use. But you also have the option of using 2020 to calculate your average of 2.5 months of payroll costs, or the year prior to your application. In terms of whether you can use the or whether money like the Honolulu City and County relief grants or other non-PPP money, whether that counts in your gross receipts, at present it looks like everything except your first PPP counts.
Your first PPP and idle advance.
And idle advance, excuse me.
Question
about
the taxes, the GE taxes don't apply. You can take out GE taxes. You can take out
you're actually required. You're actually required to take out GE taxes under the definition for gross receipts. And I think that is it there. I did misspeak last time. So in terms of the deductibility, that is not something that is dependent on whether you already got forgiveness. Your PPP 1 is still deductible. So I apologize for misspeaking last time. Okay, questions that are open.
Hold on. Do we know that
under
state? Do we know that under state law yet? Stacy,
that's a state. Yeah. So my answer was for federal law. Stacy, do we know the answer under state law?
The state hasn't conformed yet to the federal law.
Yeah, you would in ordinary times you would expect them to, but as we all know, we haven't had ordinary times for a while.
I would expect that, I would hope that once the legislative session opens, they're going to issue the conformity bill that would conform to control.
They have in the past for the PPP stuff, so hopefully. So the first question is what documentation essentially you'd use to show the 25% decline in gross receipts? And I think it's your income statements or profit and loss statements or bank statements is what the SBA has identified.
Tax return that shows a quarterly income amount. So I would just use your internally prepared financial statements, and it should be consistent with whatever method that you use, that you report you file your taxes on. So if you file your taxes on a cash basis, you would use cash basis income statements.
Stacy, how about your quarterly GE tax returns?
There's only a few companies that actually qualify to file for quarterly GE tax returns, but
Yeah.
that would be acceptable as well.
Yeah, yeah.
The only thing though about the GE tax returns is the income that you typically report on your GE tax returns includes GET collected.
Yeah.
Yep.
If you remove that.
Yeah, and actually it's not for a number of businesses, it's actually going to be monthly GE
Mhm.
tax returns.
Mhm.
But just to Stacy's point, that number is not necessarily the same as what this definition is. And the definition, which is included in the interim final rules, and I think we did lift it and paste it into our memo, is a little bit involved. So, you could take a look there. Next question: does TDI FUI state UI? What is FUI?
I think that's FUTA, not UI. That's probably FUTA.
Oh, that's not FU. Sorry. Okay. Work comp count in payroll costs. So it's the same as before. So they do not, other than workers' comp now costs, right?
And-
Because that would be essentially a disability insurance. And other, well, I guess.
I think TDI and SUTA also are included.
They are,
Yeah.
but that's for when you go for forgiveness. It doesn't go into the calculation for your next PPP2 loan amount. The loan amount is based on average monthly income times 2.5. You don't add those things in. So this
Payroll costs, got it. Okay.
But they are,
Go ahead.
Cynthia, but
Yeah.
but you're saying that they are workers' comp and TDI premiums paid
no,
during the premium are part of payroll costs?
no, those are, that's what, no, I'm not saying that. What
Yeah,
Darren-
okay, I didn't, yeah.
Correct. I was just thinking that if you thought you could add that in for your loan amount for the next second round, that's not. It's two separate things from forgiveness and how you determine your next loan amount.
Loan amount versus eligible costs.
Eligible, forgivable costs. Correct.
Yeah, because what got added or at least clarified in terms of eligible forgivable payroll costs is payment required for the provision of group healthcare benefits, group
Yeah.
life, disability, vision, or dental insurance, including insurance premiums.
Yeah, and
So disability
and-
insurance premiums, essentially.
Yeah. But so the legitimate question is, how about the payments I make for my workers' compensation insurance and my temporary disability insurance to comply with state law? And it's possible to read that definition as including those. That's a legitimate question. I'm just not sure that answers it.
I hear you.
Okay.
Okay.
Yeah.
Next question. Will headcount be based on the quarter we use to show the decrease in business? Headcount, I'm gonna
No.
reinterpret talking about
No,
FTEs.
300 employees is the day you apply.
Oh, that headcount. Okay.
Yeah.
Okay. Got that
Now,
one.
for forgiveness, if the question is forgiveness, if you're looking at the FTE reduction, right now it's still February 2019.
Mhm.
Okay, but we hope they change. There's a hope that they change that. Congress has given them an opportunity to change that, but the SBA and Treasury haven't done that, and I don't think it's high on their list.
Yeah, let me unpack that. Let me unpack that a little further,
Yeah.
which is the current requirement, and this is the issue that is carrying over and raising a lot of questions in PPP2. The question is, I use all the money for the correct uses in the 60-40 ratio, 60% payroll costs, 40% non-payroll costs. But what do I do about FTE reductions? And that's a problem that I would say most employers faced in the first round in terms of not getting docked on forgiveness for FTE reductions, and is a requirement that still remains in the second round and has yet to be, or will in the future be clarified. But the actual requirement is to compare your FTE count, which, you know, loosely people are saying head count, et cetera, but it's your FTE count, comparing it to a reference period. And that reference period is, you have two choices currently. It's between February 15th and, why didn't I open it up ahead of time? June 30th, 2019. So that average FTE count between February 15th and June 30th, 2019, or the first 2 months of 2020. And essentially you want to pick the lower head count. And the way that the reduction is currently constructed is that if during whatever period you choose, 8 weeks or 24 weeks or whatever it is in between for your covered period, your FTE count has to meet or exceed the reference period. So when we were kind of just shorthand talking about it, that's what we're talking about. And for many employers, the FTE count in the covered period, say it was you got your loan on April of last year and used a 24-week period, your FTE count's lower than say the reference that you're using, which is the first 2 months of 2020. Then the question on the table is, how do I get into one of the safe harbor exceptions so that my forgiveness is not reduced? Okay, sorry for rambling. Anything you guys wanted to add to that before I jump to the next question?
Let me answer James' question. Is there a list of these forgiveness traps you guys can put together? So the forgiveness traps are, and let me just say it again, Darren alluded to it already. Look, you get the 60% of the loan to payroll costs, 40% to non-payroll costs. You're all good, but then that forgiveness is reduced if you reduce any individual employee's compensation by more than 25%, or you don't maintain the same full-time equivalent employees that you had back in February 2019. But there are some and those are what I meant by the forgiveness traps. Okay, and those forgiveness traps, reducing employees' pay by 25%, or not maintaining the employees you had back in 2019. The best way you get out of those forgiveness traps, James, and anybody else that's asking, is you refer to the state and county shutdowns. And if you can show that the state and county shutdown, travel shutdown or business shutdown, substantially impacted the number of employees you have, then that is probably the best way we have now to say, you think about using that to get around what I called the forgiveness traps.
Just so you know, the forgiveness traps are outlined in our memo that's on the Google Drive. It starts at around page 6 of the memo.
Yeah. Let me take another crack of just sort of putting it in a framework. Think of your PPP2 as having 3 parts to it. The first is, am I eligible? How much do I get? Right. That's the added requirement of a 25% decline quarter over quarter, that whole thing. Okay. So that seems fairly clear, and there's been quite a lot of talk about that. The second piece is it's using the money for the right purposes. And that's the 60% payroll costs, 40% non-payroll costs. Now you get to choose a period in between 8 and 24 weeks. It's very permissive now. So all the, sorry, go ahead and mute probably. It's probably on Jeff's, but go ahead and mute. So a lot of the changes to PPP that have been made up through now have just made it much, much easier to use up all the money, because they give you a longer period. You can go all the way to 24 weeks, which is what, like almost 6 months to use the money up on the right purposes. So that part is made easier. But the third piece is really where all the hangups are. And the third piece is, I used up all the money, but do I get my forgiveness reduced? And as Jeff pointed out, there's two places where you would get reduced. One is that reducing individual employee pay more than 25%. And then the second is the one that's getting all the attention, which is your FTE counts. So that's in the total framework when we're talking about, hey, we have a FTE count that is not high enough and we need an exception. You know, that's where Jeff is saying the one that you most likely are going to use is the exception that says, this exception applies when a significant amount of the reduction in business activity resulted from state and local government shutdown orders based in part on guidance from federal agencies. So that's a framework. Go ahead.
And that to keep in mind the purpose of what this round 2 is, why you need the funds, and to keep people employed and help you keep continuing your business. So, you know, the forgiveness part, you don't want to like focus on what can be forgiven or not. You want to really just follow the guidelines that are on the instruction forms. It's a little clearer now this time around on the application form, how to calculate it. When there's some questions on there, like, is there flexibility? I think Desi put on the decrease in revenue. No, if it said you can choose which quarter you want, you know, use the same baseline period and to show, but it has to be at least 25% decrease. So it's to show that you had economic loss. That's why you need these funds. That's how you're verifying that or certifying. That's why you need the PPP. Same, I think there was another question. So yeah, just keeping that in mind. I won't answer other questions, but just, yeah, I just wanted to reiterate that. Think about who do you employ now, and knowing what some of the forgiveness rules are now, and it may change, but knowing as they are now and all that issue we had about whether it's full-time or part-time, just be more conservative and include the people that you know you have hired that are full-time and that are on board that you want to keep employed from now and going forward as you get the funds.
Cynthia, I think that next question is one that you touched on before, but why don't you recover it, which is if you already got, well, I guess this is slightly different. I've already paid off the idle amount to my bank. Will I be able to get that money back since I paid it before the new PPP rules were established?
So I'm gonna assume things for Tracy. I'm gonna assume that you're referring to the idle advance portion. So if you got, like, say, for example, you have 5 employees, so you receive $5,000, and that $5 advance was deducted from your PPP forgiveness. Yes, the SBA will contact your bank, let your bank know, and your bank will then reimburse or will be communicating with you.
Okay, and Jeff is blasting away on some of these. So
I can take the next one. So the next question, we were participants in the Aloha Connects Innovation Initiative and hired 2 employees through it. So our employees as part of that program count towards the PPP. And I'm assuming you mean the head count, but in the ACI program, which I was a part of as well, your employees were actually employers of the Economic Development Alliance of Hawaii, and they weren't on your payroll, so to speak. So I wouldn't use that as part of your head count.
Yeah, and one point of clarification from these prior ones, you do not, getting forgiveness on your first loan is not a requirement of obtaining a PPP2. The requirement is that you have used or will use by the time that you get your loan all funds from your PPP1, so that you will have used it, but not necessarily obtained forgiveness.
Darren, on there's a number of questions on the employee retention tax credit. And I think the best thing to do is to refer the participants to pages 15 and 16 of our memo, which goes through the criteria. There are some caps, but they're fairly generous caps. There are some eligibility requirements as to the loss you suffer. But if you, within those caps and assuming the loss you recover, and there are also some employee caps, especially going back, but the benefit available is taking 50% of your wages off your final quarter of 2020 941 and taking 70% off of the wages you pay your employees off your first and second quarter 941s. And so it's as long as those wages that you're taking the credits off your 941s from don't duplicate the wages that you used your PPP loan for. So it's potentially a tremendous benefit, as Darren pointed out from the start. And it's something you don't have to ask anybody for. You just need to make sure you're right and take the credit on your 941.
Yeah, I'm going to sound like a broken record on this. So, because this is truly new. Like PPP2 is another round, and we're familiar with it. But it was in our first memo, the employee retention tax credit, but we paid no attention to it. And the reason we paid no attention to it was because everyone on this call, all 640 of you, probably got PPP money, and at that time you couldn't use this tax credit, but now you can, and then they expanded it and made it easier. So if you're a business that has employees, so I'm not talking to the sole proprietors, the where there's no employees, that sort of thing, but all these businesses that had employees and are under 500 employees or under 100 employees, and you got whacked by COVID, which is a good chunk of you on our webinars, because we interact with you by email and such. If you are going to qualify for PPP2, then you already have a 25% decline. So in the employee retention tax credit, I'm going to bet that for many of you that are going to qualify for PPP2, you're going to qualify for the tax credit as well, because the tax credit portion that's for the first 2 quarters of 2021, that piece of it, you only need to show a 20% decline, and you can take 70% of the employee's wages as a tax credit up to $10,000 per quarter. So 70% of $10,000 is 7,000. So there's, for each employee, there's theoretically 7,000 available in the first quarter and 7,000 available in the second quarter of this year. That would be $14,000 of tax credit just for one employee. So it's definitely worth digging into, because I know many of you are super up to speed and in deep on PPP and have been with us through webinar after webinar and are real deep into the innards of it. But I would say if you think you likely qualify for the tax credit, I would get deep into this as well, because there is a real substantial amount of money here, and it's not getting the press attention. It's really PPP2 is getting the press attention. So, dig in and look if you may be able to claim the credit for 2019 for at least some period of time, and then see if you're going to make it for 2020. Some thoughts on marrying the PPP2 and an employee retention tax credit together. So you should keep in mind that you can't use the tax credit while you're using PPP. But if you use up all your PPP2 in a way that you can get full forgiveness, and you still have a period of time left over where you could apply the tax credit, you might be able to get up to the whole or very close to the whole tax credit per employee. So I'll just give you an example. If you get a PPP2 loan, say on February 1st, and then you use an 8-week period to use up all that PPP2 money for payroll and non-payroll costs, and it's all forgivable. So say that takes up February and it takes up March. That leaves you all of January to squeeze into the employee tax credit for the first quarter. And then it leaves you the entire second quarter to make it for the second quarter tax credit. So, think about how they interact so that you can, to the extent possible, take advantage of both. Okay, I beat that horse.
Before we leave the subject on employee retention, the employee retention tax credit, I wanted to just answer Zach's question. So it doesn't matter if it's a full or part-time employee, you can take it on any employee.
Yeah, and it applies also to tax exempt organizations. So
let me take the next question. Marcia's question, would the PPP loan we received in 2020 be counted for purposes of the revenue loss? No. Even if that loan is forgiven, it will not be included in the gross receipts. So that, don't count that loan.
So don't count that one or the idle advance if you received it.
Yeah, don't count that in your gross receipts. I'm not so sure about the city and county grants. It's not clear. I would think using the principle that's right in the regulations where they say the amount of any forgiven PPP1 loan isn't included in gross receipts, that you probably have a good argument that any sort of city and county grant follows the same suit, and that's not really gross receipts. But the only thing that SBA regulations say now is that the PPP1 is not included in your gross receipts for purposes of determining whether or not you're eligible for PPP2.
Yeah. Okay. And we've heard rumors that the full acceptance of applications may start Friday, but that's not from the SBA and it's not confirmed. So I guess I'm passing on a rumor, but
right. So how it works is the SBA might have the portal open, but it's to the lenders. And when the lenders are ready to open up their portals, that may be on, for example, if the SBA opens the loan portal to the lenders on Friday, and if the lenders are ready, they will open. But when they open to their borrowers or applicants, that's to be determined by each bank when they're ready.
Yeah.
So when
I'll attribute the second comment to is it AICPA,
Yeah.
Stacy?
Yeah, it was
which is they think there will be enough money. So
yes, in other words, spend this time to gather your documentation and just make sure that you're not rushing and submitting a potentially incorrect application. I think they've also said that there's a little bit more screening procedures that are going to be placed on the applications this time. So you really want to make sure that you're submitting complete and accurate documentation.
Yeah, and one of the benefits of going back to the same institution that gave you the first loan is that they already have all your payroll figures, presumably for 2019. So if you're using 2019 as the basis for calculating your loan amount, again, it should be a fairly simple process if you're at the same place that already vetted all that information, unless you're going to use, 2020 or a different basis. But for the vast majority, I think you're going to end up using 2019 because all the reductions happened in 2020. So the lender you went to originally will be way ahead of the game, presumably, in already having most of the information you need. And then really the information to be provided at that point is for loans over $150,000, you're going to have to substantiate that 25% loss. But for the loans under $150,000, the documentation is deferred until the forgiveness process. So you're not even going to be required, presumably, to provide the supporting documentation to show the 25% decrease if you are a loan under $150,000.
But
okay, so
have it ready, because
yes, sure.
And you are going to be certifying that you meet the criteria to receive the loan.
Yes. Okay, so final thoughts. We'll go in a circle. Stacy, any final thoughts?
No, I mean, I think I'll just echo what Darren's kind of the dead horse that Darren beat. That you really want to look into the employee retention tax credit and make sure that you're taking advantage of that. I think that's a really big add-on to this latest bill.
Jeff, final thoughts.
It's good being with all of you again. We're going to probably be seeing a little bit more of each other than we have in the last couple months. This first round of guidance is clear in a number of respects. When I look back to where we were in the first month of PPP1, I think we have a better understanding of how to work with this sort of process than we did back then. But many of the questions that I've seen in how many do we have now? Over 100, 115. Many of those questions are the same ones we have. Darren or Evan, maybe you could let people know that we'll try and get back to them with many of answers to many of those after.
Cynthia, final thoughts.
Just to add on to what Jeff said, yes, I noticed that there's still a lot of open questions, some which there are information, but you have to really go through the IFRs where we can get back to you. Also, want to thank Evan and Jeff and Darren, Buddy, Stacy for doing this and offering this webinar today. We are going to continue to have webinars with this team and with others in the community and with lenders. So think of all your questions and we'll be providing more information. We get the information at the same time. That is when it's posted on SBA.gov. So bear with us as we do the research, but we do want to make sure that your minds are put at peace. And more importantly, that we are helping all the employees out there, your businesses, and the Hawaii small business community. Thank you so much.
Yeah, thank you, Cynthia. My final thought is when we started this back in April of last year, we had a whole bunch of topics on the table: families first, sick leave, PPP, etc. And eventually it all coalesced around just PPP. My view on that now is it is now coalesced around PPP and the employee retention tax credit. I think it's that important. So with that, thank you for joining us, and we will see you all next time in the virtual world. Take care.